All right, cool. So now it's being recorded, guys. So we're going to go ahead and just continue this technical analysis. So basically, we drew these support and resistance lines, guys. Again, everything I'm talking about is in the academy, but I'm just re-emphasizing it so you can maybe understand it a little bit better if you haven't yet. So if I zoom out really far, guys, we're on this one-day chart. These are basically the lines we've drawn so far because we're just focusing on this area. You can see we wouldn't even really need these ones that are way up here because price probably won't reach that. Again, we're day trading. We're trying to focus on fast movements. So that's why we're not focusing on any of these areas. So what we're going to do now, guys, is we're going to go ahead and we are going to go to anywhere from the 1 to the 4 hour. It just depends on what you can see. So let's start with the 2 hour, and we're going to kind of zoom out. And you can see, I'll actually even go to the 4 hour and show you guys because I've been doing this for a while. You guys see this big drop here, right here? This was January 1st of 2019. This is right around when I started trading Forex, right here. I remember seeing that. I was like, holy cow, I just got into the business. I was brand new. It was just a massive drop at New Year's. And I've watched this whole trend develop over a year and a half now. It's kind of crazy. That's why when I saw this right here, just absolutely wild. But one thing you can realize, this is kind of what I used to show back in the day, guys, is, you can see, you first want to identify, is it a bull market or a bear market just overall? Is it uptrending or is it downtrending? And so when I first started doing my chart training sessions, it was in this downtrend, and you could see then it started going into an uptrend and so on. So the way that you kind of draw a trend line, guys, is it just, first of all, it kind of, looks like this relatively. That's kind of how you can draw one just for the most part. That would be the base of the trend. That's the bottom of you could call it the trend. There's a top and a bottom to it. And I'll explain how you draw one after this, but I'm just kind of showing you guys how it would look. This is kind of how it would look to draw a trend line, kind of specifically for this trend right here is how I would draw this one, guys. And you can see obviously that, it broke this trend. It went on a completely different trend. And so since it broke the last trend, it completely broke it. It's not even following it whatsoever. We can just remove that trend. It doesn't even matter anymore. And then what it did, guys, is it made a massive pivot in the market and started, going on this trend. I'm going to teach you how to draw a trend line just with this one specifically. Okay. So when you're looking at a chart, the way to draw a trend, in my definition, is what you want to do. Let's say right now, okay, we identified that this is an uptrend right here. This is an uptrend. You want to go to the far left, most bottom candlestick. That's where the first point on the trend will be. A lot of you probably say, okay, far left, most bottom candlestick would be right here. The problem with doing it right here is if we do that, it doesn't really fit anything. Like, it doesn't really line up at all. It doesn't really touch anything. You need to at least have 3 areas that it touches the trend for it to be a good trend line. What you're trying to do is identify the trend and make it fit really well. What I like to call this little line right here, this is an outlier. If you don't know what an outlier is, let's say the number is 1, 2, 3, 4, 70. 70 would be an outlier. And so what I would say would fit better is far left, most bottom candlestick would be this one. Because if we use this one, it fits really well. Right here you can see we already have, 1, 2, 3 areas touching. If we were to drag it in even more, now you can see, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, a bunch of areas touching, guys. It fits very well. This fits a lot better than, doing it below that. So that would be the base of the trend, guys. Far left, most bottom candlestick, and you find a good fit that has at least 3 areas touching. Now here's how to do the top. The far left, most top candlestick. So again, a lot of people would choose right here, but if you click on that one, again, that doesn't fit very well. That doesn't fit very well on this chart. I can even actually, just so you guys can probably maybe even see this better. I don't know if you guys can. You can let me know, but I'll change it to dark so maybe you can see it better. Oops, I actually can't do that because I made these support and resistances. I make mine black. But yeah, guys, we'll go ahead and we're going to click on here. We're going to click on this one right here because this is an outlier. We're going to click right here because this fits a lot better. And what we could do is you could do right here, and that would touch 2. You can drop down. Now it touches about 4 or 5. We keep going. We can keep going. We can keep going. And now I'd say right here is the best fit. And that's because it touches the most areas, guys. That touches the most areas. I know it's on, some people see it. It's on the outside of these trends. Or my bad, if I bring it in right here, you can see that it pops out in these areas. It pops out right here. It pops out right here, you know, in these different areas. That's because it's breaking the trend line and it's riding the top of it. And then boom, it breaks back in. You know, if I go ahead and zoom in a little bit, you can see right up here, it breaks the trend line, comes and supports on it, and then falls back in, hits this support, comes back up, broke it. It's resisting off this black line I drew, breaks back in. That's what we're able to identify, guys. This is all called technical analysis. It has nothing to do with news. It has everything to do with drawing support, resistance, and trend lines. That's all this is, guys. And so obviously this trend has been broken. I mean, you could tell. I just kind of wanted to give you guys an idea of how to draw a trend line. So if we go over here, guys, and we go focus on what's been happening, you know, recently. This, you know, today was, you know, it had a really big pump in the market. So the trend line may have been, you know, disrupted a little bit. But for an example, if I take this one, I'd say right now, this would probably be the, I'd even say like right here, this is probably, you know, in my eyes, that would be the best trend right there. That would be the base of a trend right here, guys. This is a broken trend. And plus it's not that long of a trend. So it doesn't have much credibility. You know, it's only been going on since May 7th, you know, less than a month that this trend's been happening. And then if we go ahead and we take this tool, we can go ahead and identify the top of the trend right now. And so you would want to go roughly right here because that lines up perfectly with it. And you can see, guys, this is kind of what's going on right now. And so as a trend, it starts to get closer and closer and closer to the little point. That's when usually, boom, a new trend's created, and it's going to go create a new trend. And so that's kind of what we're focusing on, guys, right now. This is kind of a little different of an example because of this massive pump today that the market had. But if I go ahead and zoom in, what we're going to do right now is go to the 1 hour chart. We're going to focus on this a little bit closer. If you guys look, we started on the 1 day chart. We started on the 1 day chart, way zoomed out. And you see how we started the 1 day and we're just getting closer, 1 hour, 2 hour, 3 hour. And then we're getting closer, you know, the 1 hour, then we're getting closer. Well, once you hit the 15 minute, we're just getting closer and closer and closer. So if I go ahead and keep zooming in, I'm going to go back to this 1 hour chart, guys. You can see where it's really having detail now. And you're actually able to, if you want, to draw more areas of resistance. You can kind of adjust the lines to make things fit better. And so we know, for an example, guys, with this support right here, if price ever comes back down, all the way down to this area, it's either going to eventually bounce off this line or it's going to break through it. And if it breaks through it, it'll probably come to this area next. You know, you look for the next lowest area. I'd say right there. If it broke this area, boom, it comes to the next area. If it broke that area, come to this area. That's what it does, guys. You look for break and retest. You look for areas to be broken and the next area to be hit. That's kind of how it works, guys. Some of these areas I'm talking about, there's something called a psychological number. Okay, I'm going to explain what that is. A psychological number. So, for an example, right here, guys, it's basically whole numbers. So if I move this out of the way, you guys see how price came up to here. I'm going to move this right here. Price today came up to this area right here. If you look at the right side, 108.8. That is a whole number. That is what you would call a psychological number. It's a flat number. It's a whole number. And that's often a number where banks do reversals. They reverse it. They bring it to psychological numbers. It's almost 109 flat. Usually whole numbers, 108, for an example, and 108.5, 109, 109.5. Those are very strong psychological numbers where people, banks, a lot of people, they're like, I want to get this to this level flat. They never just do a random number. They say a flat level. And so that's called a psychological number, if that makes sense for you guys. That's an often area where things have turnaround points. So right here, you can kind of see this is 107 flat. It broke above the 107 flat area, and it's been hanging above there. That was actually a really big area. And yeah, so guys, what I just kind of explained to you is how to do support resistance trend lines. And, I don't expect you to understand it your first time seeing it, if you're new right now. Some of you may be like, this makes complete sense. Some of you are like, oh, I need to see this a few times. And that's okay. With time, you gain more education. I want to tell you guys a few sayings right now. If you've traded before and you've been really emotional while you're trading, That it's a quote Ness taught me a while ago. If you are emotional while you trade, it's because of a lack of experience and education. I'm going to say it one more time. If you're emotional while you trade, it's because of a lack of experience and education. If you weren't, if you were educated and experienced, you would be way less emotional because you'd be knowing what's going on. And that's why the more education experience you gain, the less emotional you're going to get. If you catch yourself being emotional, you should let yourself know, okay, I need to calm down. I shouldn't be trading while I'm emotional. If you trade while you're emotional, you're not going to make logical decisions with trading. I'm going to go ahead and check this chat real quick. Awesome. So yeah, guys, right there, that's just how you mark up charts. I don't want to get too into detail. I just wanted to give you guys a quick rundown. I'm not going to be showing you how to place trades, how to get the best timing, but I will let you know something. The higher the time frame candlesticks, so let's say 5-minute candlesticks, 15 minutes, half-hour candlesticks, 1 hour, 2 hours, 4 hours, so on. At the end of 15 and above, it gets very volatile. So right now we're on the 15-minute chart. So these are 15-minute candlesticks. At the end of each one of these 15-minute candlesticks, there's 8 minutes and 40 seconds left on this one. They start going, they start getting volatile because it's the bulls versus the bears. They're fighting to determine if it's, like right now it's fighting. Is it going to be a green or a red candle? Is there going to be more buyers or more sellers? That's what this 15-minute candle is fighting over. That's the same when you go to 1 hours. Right now there's 23 minutes left on this 1 hour candlestick. So far, the bears are winning this. There's more sellers. And so that's why near the end of these candlesticks, it starts to get volatile. If you've ever heard the traders, guys, let's wait for the end of this 1 hour candlestick to go by. Let's wait for this candlestick to be done, so we can get a fresh candlestick. Sometimes you catch the end of a candlestick, when it's ending. And so something that Matt does on his trainings, and I used to do them on these ones. I used to, but then he kind of just, does it, is I would go over, how to use the cash trap. I would go over, how, this, because the cash trap used to have a lot more stuff in it. I know you guys can see all these things. Let me go ahead and can actually hide these a little bit. But if I zoom in so you can see a little bit better on what's going on. This basically is what the old cash trap kind of looked like, and it was before it was good. It's before it really worked really well. But what I would do on these guys is I would kind of go over how this works. I would explain these strategies a little bit. Obviously you understand what a sell means. You understand what a buy means. These little arrows. But there's these parabolic SAR dots, which if they're on the bottom of the price, they're below the candlesticks. That means it's a buy indication. It's pushing the market up. If it's above, these candlesticks, if they're above, the candlesticks, these dots, it's a sell indication. They're pushing the candles down. And so whenever you see the candlesticks flip to the top, and now they're on top, that's a sell indication. Right here would have been a few sell indications. And so something I used to do in these call guys is I would basically find a really good area to, go in for a buy or a sell. And, I honestly, this whole template I have right here, it is it's not something we even need to teach anymore. It's not something we even need to go over. If you just have the cash trap, the hourglass in the shopping cart, it's 10 times more simple nowadays. You don't need all those indicators and stuff. All it is shoots out a buy arrow and you go take a buy at the price it's calling out, or a sell arrow. That's really how it is. Matt teaches that every single Sunday at 10 o'clock Central Standard Time. So you can always refer back to his recorded videos. He records it. Every single session is recorded every single time, guys. So what I'm going to do though is that's just kind of how you mark up charts, guys, and we're able to predict where it's going to go next. If I were to make a prediction, what I would say is if this next candlestick that opens up in 5 minutes and 40 seconds, if it can turn bullish, which is green, and if it can pass the high of this previous candlestick, if it can pass the high of that previous candlestick, it's most likely going to come back up to at least this area right here, because this is the next area of resistance. If I go ahead and draw this line, this is the next area of resistance right here. And right here, it's creating a support right now, roughly right there. So that's what I'd say, guys. That's called price action. You're waiting for candles to pass the highs of previous candles. It's called confirmations. You're looking at where the market's overall going. And we're on the 15-minute chart. A lot of you trade off of the 5-minute chart, right? That's kind of what Matt does. But you see here, right here, that's obviously a bearish candle, bullish, bearish. This one was also bullish, but a new one just opened up. That's why the 15-minute is really nice, because it really lets you know what's going on rather than playing with your emotions over and over and over. But again, if you're doing, binary options, if you're doing race option, that style of trading, you got to be kind of fast. That's how it is. If you guys have never traded MetaTrader before, by the way, some people are like, yeah, I want to learn everything. I'll learn it all at the same time. That's cool. And I recommend that. Some people go, yeah, I don't want to learn how to do any other style of trading until I completely understand and master this style of trading. That's not a good mindset. You want to simultaneously learn about cryptocurrency. You want to simultaneously learn about traditional Forex, MetaTrader. It's off the phone. That's how you trade, is you trade off the phone. You want to simultaneously learn how to do binary options trading, because you might like one better than the other. If you like fast-paced trading, you like sniper entries, you like, getting in how Matt does, catching really fast movements, making fast money, that is what binary options is, guys. And that's kind of what most of the people on this team do. Pretty much probably everyone on this call does that. If you like the idea of just catching movements, if you like the idea of, okay, well, I think the market is going to go down here. I think it's going to do this big movement over the next, few hours. And all you have to do is know which way the market's going to go. You would enter a sell. This is traditional Forex. You would enter a sell, and it's worth nothing because you're just in the position. As it starts to become correct and go down, your $0 that it took to basically take that trade will start gaining more and more value. You'll start gaining more money, basically more and more and more and more as it starts going down more and more. That's a sell. You're starting to make more money as your position that you entered gains value. If you do a buy, for an example, and the market starts going up and up and up, you'll gain more and more money. Vice versa. If you did a buy and it started going down, though, you're going to start losing more and more and more. You can get in and out whenever you want. There's no time frame. How many of you guys been in a trade and you're super in profits and you're like, woo, let's go. And then, all of a sudden the trade has like 30 seconds left and it reverses and you end up losing the trade. It's a little different with MetaTrader, traditional Forex. You just need to know what way the market's going to go and catch movement. That's what you need to do. You can get in and out whenever you want. That's why me and Jay and a lot of people, we trade traditional Forex. You guys hear me say this in the overviews. I trade traditional Forex. I also trade this style of trading that we're talking about right now, and I trade cryptocurrency. I literally do all those. I do every single one. And it's because I don't, some weeks I'll focus strictly on MetaTrader. Some weeks I'll only trade actual chunks of Bitcoin. Some weeks I'll just do binary options. You just want to diversify your education with trading, learn everything. And you just take it day by day. One thing I want to do, guys, is we got 17 minutes till this overview. So right now you should have. I'm gonna go ahead and pull up in this chat real quick. I got a couple messages. How do we find these recordings? Key MetaTrader 4. I'll go ahead and I'll post this. I will post this training to the United Traders Telegram, or my bad, the United Traders YouTube channel, and I'll post it in the groups as well. We do these every single Tuesday at 8 o'clock for the most part. It's not always me. Sometimes it's, Jake Bloomstrand. Sometimes it's other, traders on the team that hold these calls, and we give our own viewpoint on how to mark up charts and stuff like that. One thing I'm going to do right now, guys, I'm going to teach you how technical analysis works, or how fundamental analysis works. So I'm going to remove everything, okay? And one thing I want you to see right now, for example, USD JPY, it's starting to fall again, right? Let's go to currency strength meter. This is something right here, guys, that you want to refresh every 5 minutes, every 10 minutes when you're using it. This is basically a visual representation that lets you know which currencies are gaining strength and which ones are losing it. Before I just refreshed it, US dollar was 1 bar, JPY was 1 bar, and that's because it was sitting right here at this top area. It wasn't moving at all. And now that the yen is pulling. Now, basically what that means is the yen is gaining value right now. I'll explain that though. So if the first currency right here, guys, is, just in general, if the first currency in the pair, if the first currency is stronger than the second currency, the chart's most likely going up. If the second currency is stronger than the first currency, the chart's most likely going down. And so for an example, let's say right now, the US dollar, which is the first currency in USD/JPY, US dollar is weaker, so the first one's weaker than JPY, which is the second currency. And since the second currency is stronger, that's basically what's happening here, guys. The chart is most likely moving down right now. And you can see the chart's moving down right now. That's what's happening. So we can go to the 5-minute. The chart is dropping right now. That's what the currency strength meter represents. You don't really want to trade against it. You want to trade with it. So if the US dollar was stronger than the Japanese yen, this chart would most likely be going up. And so let's go ahead, let's freestyle one. How about that? Let's see. So NZD USD, for an example, the New Zealand dollar is way stronger than US dollar. This is just a complete random observation. Since the first currency is stronger than the second currency, let's go to NZD USD right now. Let's go check it out. I'll go pull it up. And we'll see what's going on. NZD USD, it's most likely going up because the first currency is stronger than the second currency. It's representing that the market's most likely moving up. The New Zealand dollar is gaining tons of value right now. That's what it means when it's strong. It's gaining value. And the US dollar is losing value right now. It's getting weak. So that's what this is a visual representation for. That's why you refresh this every 5-10 minutes. So you see, guys, that was perfectly accurate. We realized that the NZD was stronger than the USD. New Zealand dollar was stronger than the US dollar. The first currency is stronger than the second currency. The chart's most likely going up. Again, if the US dollar was stronger than the New Zealand dollar, so NZD USD, the second currency would be stronger. This chart would probably be going down then. And that's kind of what's happening with USD/JPY right now, guys. So if that doesn't make sense, go ahead and message in the chat, but that should make sense for the most part. Basically, if the first currency is stronger in the pair, it's most likely going up. Second currency stronger, it's most likely going down. That's all that means, guys. These currency pairs, they're never going to flip-flop. The first currency is the first currency in the pair is the dominant currency. Euro USD, Euro is first because it's the dominant currency. The first currency in the pair is the dominant one. And so that they don't just flip-flop, you always, it'll stay like that. That's why, it's important to know which one's first, which one's second. And that kind of brings me to the next thing, guys. That's how you do currency strength meter. Again, you could refresh it right now and they could change. Go ahead and check out this chat. Dominate in one sense. When I say the first currency is the stronger one, that means it's the dominant currency, as in it is worth more. That's what I mean by that. It's worth more, so it's the first one. You're comparing one US dollar right now is worth 108 Japanese yen. You can see, since that there's 108 yen that's worth one US dollar, obviously the US dollar is worth more. If it was one US dollar, is worth how many yen, and it was 0.88, and the yen was actually worth more, it would be JPY USD. That's how the dominant currency would be. But that, obviously you can see that's not the case, guys. So what I want to do right now is I want to explain news to you guys. We got about 12 minutes before this overview where other people are going to hop on, and we're going to kind of show them what it is we do here. Think about this. Everything you're sitting here and listening to right now, they will never teach you this in school, ever, unless you go pay a college and take certain classes, which is way more expensive than this. That's why this is such a crazy movement, guys. It's because people on Wall Street, they use big words, big names, big ideology to scare you. So you stay away from this. Think this is impossible. Institutional traders, those are the only ones who can make money. No, that's not how it is. Guys, in the last 5 to 10 years, we are all called retail traders. There's been a crazy spike of retail traders. It's insane how many people, like us are trading now. And it's because we realize, wow, we have high-speed internet. We have access to this massive market. All we got to do is figure out what the hell's going on. That's all we got to do, guys. And that's why, that's why, me personally, that's why I'm so focused on, this business, because this is literally going to change the world. Nobody has any clue. Think about all your friends, family, everyone, every single person you've met. There's like barely any of them that know actually anything about the markets. Why do you think that is? It's because they took out important financial education out of the education system. So that's why, in 11 minutes, get your loved ones on this call so we can show them what's really going on. Don't let little things prevent you from big opportunities, changing someone's life. That's why I push it so hard. I'm just letting you know. But what I'm going to do right now, guys, is I'm going to go ahead and I'm going to show you how news reacts. Okay. I'm going to show you how news kind of makes the market react. So let's go ahead and over to Forex Factory, guys. This is a news website. It's the only one you need to know, the only one you need to use. This is forexfactory.com, guys. It tells you the numbers, whether they're good or bad, and what it's for. And that's all you need. Not all the narrative behind it. So for an example, guys, today, we'll even go to, I'll kind of explain this real quick. What happens is there's news that drops every single day and it displays it. And it has a certain color folder. So there's yellow for low impact, they're expected. There's orange for medium impact to that currency expected. And then there's red, which means high impact expected. The only ones you really want to pay attention to are the red ones. Those are the ones that can actually move the market, and you actually want to pay attention to them. You only need to pay attention if it's one of the currency pairs that you trade. Remember, you want to just focus on a few currency pairs, even just one. You don't want to focus on a bunch of them, unless you're trading with a professional. Okay, you want to focus on one or two, I'd say. And so, for an example, guys, what I'm going to do is, I guess I'll do that here in a second. But if you were to click on a folder, the folder on the right side, the detail, it'll open it up, and it basically shows you, okay, what does it measure? And it shows you what's the usual effect. How do you read this actual result, the forecasted result? How do you read it? How do you make sense of it? How does it make sense? How do you utilize this information to make money? So what I'm going to do, guys, I'm going to go to a certain date that I've used for a while now. And it's just because it was such a good example. We're going to go to October 2nd of 2019. That kind of puts you back to how long I've been doing these for. I've been using this one for a while. It's just because it's such a good example. So guys, on October 2nd of 2019, let me go ahead and check this out real quick. You see here, there was 2 news releases at 7:15 a.m., 9:30 a.m. Before I, continue, these are Eastern time. So this was 6:15 a.m. for Central Standard Time, 8:30 a.m. for Central Standard Time. That's what those times are for. And so, I'm Central Standard Time. If you are in Eastern Time, those are the exact times right there. The news is dropping in New York, and then boom, it gets uploaded to this website, and now it's available. So you get to, adjust, you got to hop on for whatever time you're waiting for the news to drop. So you guys see right here, the US dollar at 8:30 a.m. Central Standard Time dropped crude oil inventories. And if you know anything about oil, it's a massive commodity in our country, basically, that we use. It moves our currency like crazy. We sell tons of it, we buy tons of it, whether you like it or not, but you can use it towards your advantage to trading. So for an example, this is a red folder, high impact expected. We come right here and we open it up, and you can see, let's look what this measures. So the change in the number of barrels of crude oil held in the inventory by commercial firms in the last week. So there's giant commercial firms around the entire country, and they hold tons of crude oil, barrels of it. And this basically measures, how much inventory they have. And if you know stuff about inventory, you can't have too much inventory because it fills up the inventory room. It fills up these warehouses. You have to get rid of inventory at some point. If you don't have any inventory, you need to get some, and so on. So if you look right here, guys, it drops once a week. We can go ahead and open it up. And what you want to do with news, by the way, is, so this is September. We see it was bad. So far, it was pretty much bad for September. If you go back to the previous September, you could see it was looks like it was kind of good, and then bad near the last 2 weeks of September. And so one thing I want you to realize is it correlates year round. But with this coronavirus, everything got fluctuated like crazy. So you want to be careful in a year from now, comparing data from March to March of 2020. It's going to be all volatile results. You don't want to compare it to that. So you can always compare it to previous times, okay? Like consumer spending, for an example, it goes up like crazy in December every year because everyone's buying tons of presents. Everyone's putting tons of money into the economy like crazy. They're just buying everything for everyone. And so it's just crazy realizing it. So that's when consumer spending comes up, really good for the economy. Then no one has any money, so everyone gets off their ass and they go and get a job. And I'm not saying it's, I'm not being weird about it, but for real though, right after, New Year's time, everyone goes and tries to get a job because no one has any money because they just spent their last money with whatever, traveling, consumer spending, all that. And then unemployment goes down. It's just really weird. It happens every single year. And so what happened, guys, is basically, you know, it was getting pretty bad in September, and they expected 2 million barrels of crude oil to be in inventory, you know, commercial firms all around the country. But there was actually 3.1 million barrels of oil. And so that was 1.1 million more than they expected. And when, and you know, kind of the way you read this, if the actual result is less than the forecasted result, it's good for the currency. So the actual result was basically less than the forecasted result. So what I mean by less than is, you know, it was worse. It was worse than, so that's why it's red. And since it's a bad news result, that's going to be bad for the US dollar. And that's why, you know, this is what happened on that day. When that news dropped and that was bad for the US dollar, you know, basically if I go ahead and I just show you guys, if we go to October 2nd of, if we go to October 2nd of 2019, right here it is, we can see, if I zoom in a little bit, the US dollar lost tons of value. You can see right here, this is October 2nd right here. This is what happened, guys. Oops, that was lower online. You can see this is what happened, guys. October 2nd happened, and then just a massive drop of the US dollar just the next day. Just tons of value lost. And that's because the US dollar lost tons of value. So since the US dollar, guys, oops, my bad. Since the US dollar lost tons of value, what that means, it's going to take less yen to equal US dollar. And so that's why it's going down, down, down. That's why the yen was going down, down, down. It's taking less yen to equal $1 US. The US dollar lost a bunch of value. Type some ones in the chat if that makes sense to you guys. The US dollar lost value. So now it takes less yen to equal US dollar. That's why it started going down. Here's the thing, guys. It's not just USD JPY. Anything with US dollar first went down that day. USD CAD went down that day. USD CHF, USD CNH, USD, the Russian ruble, anything, guys. Anything with the US dollar went down that day. You can see right here, guys, this is where it was, but this is the October 2nd day right here. It fell drastically on USD CAD. It's because the US dollar lost value, guys. And then you can flip it. Check this out. Euro USD, you know, Euro USD, guys. Since USD is second on that day, that's what I'm looking for right now. On that day, guys, since the Euro USD, the US dollar is second, I still have the arrow drawn from the last time. You can see it went up in value because now it's, since the US dollar just lost value, it's worth less. It's going to take more US dollar to equal €1 because the US dollar is worth less. That's how everything works, guys. It's crazy. You know, if one currency loses a bunch of value, so check this out. Gold went up this day because it's going to take more US dollars now to equal 1 ounce of gold. It's going to take more Bitcoin now to equal 1 Bitcoin. It's going to take more US dollars now to equal €1. It's going to take more US dollars to equal 1 Australian dollar. And then if you put USD first, it's going to take less yen to equal US dollar because the US dollar is worth less. Take less Canadian dollars to equal a US dollar. That's fundamental analysis, guys. You listen to news, you look at results, even political speeches, all that stuff, guys, you know. That's how you're able to depict which way, you know, one currency is moving for all those currency pairs with that currency in it. It's just, you know, simple news releases, guys. So every day you want to refresh this and check what's going on with Forex Factory today, you know. Is it good or is it bad? So that, guys, right there, that is fundamental analysis. And, you know, you'll learn more about this through the Academy. I hope you guys just learned something in general on this call. That was extremely helpful, these trainings. Yes, these trainings are weekly. On to the overview. The overview starts in 2 minutes. So if a currency loses value, will the pairs ever switch on? No, the pairs won't switch. Don't worry about the pairs switching. Yeah, guys, hopefully you learned something on this. You know, type some ones in the chat if you're able to gain some sort of value from these guys. That's why we have these. It's to give you another perspective, you know, hear from people that are just like you guys. Yeah, I'm just in Maple Grove, Minnesota. You know, all I've been doing is I've just been doing this for a long time. That's it. If you keep doing it, eventually you'll be one of the people that, yeah, I've been doing this for a long time. You'll know tons of stuff. The reason so many day traders fail is because they quit. You know, they don't turn into a millionaire in their first month. They don't have Matty Pips results in their first month. They don't stay consistent. They don't follow the risk management rules. They don't actively try to learn. They half-ass it. And you know this, when you half-ass something in life, you're not going to get the results you're looking for. So, yeah, I hope you guys learned something. We're going to do this next week, guys. And, go ahead and next time have your team on this call. But for right now, guys, what we're going to do is we're going to do this overview and, have some guests hop on this call. We're going to break down how we trade, how we do this, and kind of explain it to them, why we're doing this. So I'll see you guys here in the next 5 minutes or so.